On Wall Street, things are supposed to make at least some sense. Good news should mean good results, right? But what happens when that playbook gets thrown out the window? Today, we're unpacking a really bizarre day where investors dumped financial and tech stocks and then poured their money into precious metals. It was a day where fear just completely took over. Okay, let's get into it. And this is the central puzzle we've got to solve. On one hand, you had all the right signals. Major banks were reporting solid earnings, and the data showed people were still out there spending money. By any normal logic, the market should have been up. But it wasn't. So what in the world was going on? The final scoreboard tells the story pretty clearly. Everything ended in the red. But look really closely at the NASDAQ, down a full 1%. Now that's not just a little dip. That's the market's big tech engine really sputtering. It's a sign that investors were genuinely rattled by something. To start figuring this out, our first stop has to be the financial sector. This is really where the day's weirdness was on full display, as some of the biggest banks kicked off earnings season. And this, right here, just perfectly illustrates the paradox. You've got giants like Bank of America and Citigroup coming out with earnings that beat what Wall Street was expecting, and what was their reward? Their stocks got slammed, dropping over 3%. It's like winning a race and getting a penalty for it. It just doesn't add up. So what gives? If the numbers from the past looked great, it must mean investors were looking ahead, and they did not like what they saw coming. The fear wasn't about what just happened, it was all about what might happen next. And here's the thing, investors were totally looking past those good numbers and focusing on three potential headaches down the road. First, there's this threat of new government rules capping credit card interest rates. Second, a classic case of people just taking profits after a nice run. And third, all this political drama brewing around the Federal Reserve, which, just creates a ton of uncertainty. And this wasn't just some vague worry in the air. Jamie Dimon, the head of JPMorgan, he came right out and said it. He called these proposed rate caps a bad idea for everyone. And when one of the most powerful people in finance gives a warning like that, believe me, the market pays very, very close attention. So you've got this cloud of fear hanging over the banks. Now, let's shift gears and look at the tech sector, where a totally different kind of storm was brewing, this one all about geopolitics, and it sent some serious shockwaves through the market. The big trigger was a bombshell report from Reuters. Turns out China is putting new import restrictions on NVIDIA's powerhouse H200 AI chip. This isn't just some small trade issue. This is a major move in the global chess game for who's going to dominate tech. And the reaction was immediate. The entire tech-heavy NASDAQ dropped a full percent. So why such a big reaction? Because a move like this threatens the whole incredibly complicated global supply chain that the entire AI revolution is built on. It just injects this massive dose of uncertainty right into the market's hottest sector. Okay, so you have fear gripping the banking sector and fear shaking up tech. When the market's two biggest engines start sputtering at the same time, money doesn't just sit on the sidelines, it runs. The question is, where did it all run to? Our first clue is right here. This is the VIX, which is basically Wall Street's fear index. It shot up almost 5%. You can think of it as the market's anxiety meter. And on this day, that needle was way over in the red zone. And when anxiety spikes like that, investors scramble for what are called safe havens, assets they think will protect their money from whatever storm is brewing. The classic safe havens? Precious metals. And boy, did they have a day.
Now, this is what's really fascinating. Gold hitting a new high, that's a big deal. But look at silver. It exploded over 7% in a single day. That's not just a small move, that is a stampede. People were rushing for safety.
And what was pushing this rush into metals? Well, it was the very same fears we've been tracking this whole time. The political noise around the Fed, rising tensions in the Middle East, it all pushes investors towards tangible things like gold and silver as sort of a shield against all that global uncertainty. All right, let's put all the pieces of this puzzle together. You had fear about future regulations in banking and geopolitical conflict in tech, and those fears were so strong they completely drowned out the day's good economic news. So, on a chaotic day like this, what are you actually supposed to do? Well, this is where discipline really matters. First, and this is the big one, don't make sudden moves based on one day of panic. Second, use a day like this as a chance to check your own portfolio. Are you maybe too heavy in one hot area? Third, it's a great reminder that political headlines can have a real impact on your money. And finally, having some cash ready isn't just about being defensive, it means you're prepared to jump on opportunities when other people are selling out of fear. At the end of the day, this was a perfect lesson in what we call market sentiment. It's basically the collective mood of investors. And sometimes that mood can become completely disconnected from the actual economic facts. On this day, fear, not the facts, was in the driver's seat. So the crucial thing to take away from all this is that the market isn't always rational. Sometimes fear just takes the wheel. And the real question that leaves us with is, when that happens, do you get caught up in the panic, or do you see the opportunity that it creates? To learn more about how to analyze these kinds of market trends, be sure to check out our other explainers.